Okay, so I just want to bring your attention to a potential opportunity on dollar CAD on the weekly time frame. As we can see here on the daily, you don't have to be a genius to work out we're in an upward trend, and we've got great order angle and separation between the three moving averages, the 200, the 50 and the 20. We recently made a lower high here, but more crucially we made a higher low, and we're anticipating a potential acceleration point to the upside as we've already had the break of last Wednesday's high. As you can see, bullish pin bar reversal, but what is interesting is how last week closed as a bullish pin bar reversal as well, and we can see this higher low more acutely in this formation. What one could argue is this is just, well, the previous 3 weeks have been a 3-week retracement, and we're just simply taking advantage of an intermediate or medium term pullback. So in this case we're in an upward trend, we're buying the dip, and the higher low here really does signify we could see some acceleration here. So what some traders will be doing, certainly those that trade the weekly, who are slightly more aggressive in their trading, is they'll be simply placing an order to buy above last week's high, plus spread, plus an additional pip, with a stop loss below this week's low, minus spread, minus additional pip round about here. This will mean that they can get a much better reward to risk if they're targeting the previous swing high up here at one spot 2800. As you can see here, we've got roughly about 160, 50, 60 pips difference between entry and stop loss, which will mean that there's a much better reward to risk potential here. 465 pips difference between entry and stop loss. So that is an easy, wait for it, 14165 divided by, sorry, that's 465 divided by 165. That's a 2.8 to 1 reward to risk trade. That's worthwhile, taking it to the previous swing high. But for those of you who are looking at a longer term play, then we can possibly use this as an entry point to meet all-time highs. As we can see on the monthly, let's go to the monthly here. We've got potential upside of all the way up here. Remember that the US dollar is gaining on the monthly. We've got a golden cross imminently with the 20 crossing over the 200. We've also got a seasonally bearish time of year for the Canadian dollar. Remember, we're going potentially long on the US dollar versus the Canadian dollar. Let me show you on XP clock, which is what we use, and I recommend you do as well. It's a great free resource. So you can see here Canadian dollar all the way down here. So June bearish traditionally, which is great because if the Canadian dollar is, well, seasonally depreciating and the US dollar is gaining in strength, as the technicals will confirm, that's just extra weight to our trade. Alright, so looking on the weekly here, just to recap, we've got a potential acceleration point by virtue of the fact we've got a higher low on the weekly, and we've got two methods of trading this one. A more conservative way of trading this one at the sacrifice of reward would be to place an entry above the high, plus spread, plus additional pip, with the stop loss below the low, minus spread, minus that additional pip. Okay, but that will of course inhibit reward to risk, because that will mean there's a much bigger distance between your entry and your stop loss of say 245 pips, and if you're targeting the previous swing high of 341, it's barely even a 2 to 1. So if you wanted to trade this one, a more aggressive approach would suffice and give you reward potential. Of course there's going to be barriers in the way. This previous swing high is going to be a potential barrier. It's when price travels up to here at one spot 2600, that really is a deciding factor as to whether we're going to print a higher high and we're going to get a breakout and the confirmation of what could be seen as a double bottom formation, which is a bullish reversal pattern here, but you just need to wait for that to happen, or whether price will simply trickle up to this level and go down again and make yet another lower high. Okay, so this is really make or break time, this one, which is just as well really, because we would be, if we're in the trade, we would at least have got a 1.5 to 1, and we could be at the stage where we're managing our stops and at least moving our stop loss to break even at that point. Okay, so we could benefit from at least a free trade when we're at this make or break point, if as and when price does trickle up to this point here. Okay, so that's just a trade idea going long on the US dollar versus the Canadian dollar on the weekly time frame. So how did this trade fare? Well, let's show you. Throughout summer, we had a fantastic move to the upside for dollar CAD. We got triggered into the trade and our stop loss was below the low of the bar, which actually triggered us in the trade on the weekly time frame. Then we had the surge upwards. We were able to then move our stop loss to break even as we had the equivalent number of pips profit as we had risked, and then in only a matter of weeks we're able to essentially take profit at our first target. So this is where we're able to scale out of our first position here. Take profit 1. So we sold half the position, but then we also wanted to leave half the position running just in case it does make a higher high, and as we're in a predominant upward trend, it will make abundant sense to keep a portion of the trade open so that we can benefit from further upside. After all, this upward trend, as denoted with the 20 above the 50, the 50 above the 200, is far more likely to continue at this stage than it is to reverse. So then we're able to continue our objective style of locking in profit whilst managing our trade, and that's simply trading our stop loss below the low of every second buyer bar. So we're able to do that in week 2 here and week 4 here. Okay, so we essentially did it for every second buyer bar below its low for every 2 weeks thereafter our entry in the trade. So had another buyer bar, then we moved our stop loss below the low of this bullish pin bar reversal, then we had another buyer bar, seller bar, buyer bar, so we moved our stop loss again here below the low of this second buyer bar. They don't have to be consecutive, by the way. Then we had a bearish pin bar reversal, another buyer bar, and then we're stopped out. But that's a pretty good gain, and over the course of 12 weeks we made over 800 pips from a trade setup which really only took us 3 minutes to trade.